So traders, you're wanting to develop your trading strategy from start to finish. How do you actually go about doing this? Today's video, I'm going to tell you exactly how I would do it if I was starting again as a brand new trader. And maybe you can learn a thing or two, even if you are a trader that is maybe profitable, or you're not really a beginner, but you are wanting to develop a proper strategy. This video is for you. So the first step is to build the foundations. So build the foundations in your trading knowledge. Obviously, if you want to become a trader, you have to know about trading. So if you're just starting to trade, then you need to know about, what is a pip? If you don't know what a pip is, then you're not a trader. It's as simple as that. So these sort of basics, maybe visit Baby Pips, or I actually have a beginner's course on my website, link in the description, for the beginners. So people that don't know everything about trading. So they don't want to buy an expensive course or buy my mentorship because they're not really clued up on the trading terminology. They don't know how to create a broker. They don't know how to set up TradingView. How do they set up their charts? How do they use risk to reward tools? Everything like this. This is what you need to learn at the start of your trading, because then once you come to learn about how to actually trade, it becomes a lot easier because you already have that backbone in place on just the basics. So you know what people are talking about if you're watching YouTube videos, buying a course, or just simply learning from backtesting yourself. This is how to learn, just by learning the basics at the start. The second step is to set up a broker account, so a live trading account, and set up your TradingView. I'd recommend buying TradingView Premium because then you can use the backtesting feature, which is obviously required if you are wanting to develop a strategy properly. You can do it without the replay tool, but it's not really as effective. I actually use FX Replay. There's a link in the description if you want to go check that out. Very, very good backtesting software built in with TradingView as well. And it does track all your results for you as well. So go check that out. And the last step for building the foundations is to set up a trading journal. The main reason why I say this as building the foundations is because that is the thing which most people actually fail with when they actually start trading. So I feel like if you get it set in stone from an early age, from an early start in your trading career, then you're more likely to use it later down the line, and it will obviously help you grow massively. If you ask a losing trader right now to see their trading journal or to see their trading plan, and they can't present it to you, they should have it easily accessible. If they don't, then that's probably the main reason why they're not actually profitable in the first place. They have the best strategy, but they don't actually journal their trades, they don't learn from their losses, they don't have set rules in place to actually trade, then how would they even be profitable in the first place? And the next step is to pick a trading style. And this sounds quite simple, but a lot of people actually overlook it. You're going to want to pick a trading style which actually suits your lifestyle. So firstly, you have to consider the time zone. So if you're in America, you're probably not going to want to trade London session, so you're going to have to wake up at 2, 3 a.m, those sort of hours. And unless you want to live a nocturnal life, then this probably isn't the best for you. And obviously, if you're in England, you can trade London, New York, pretty much Asian session as well if you're holding overnight. But you want to pick a session which you actually want to fit around your life. What I do is I trade London session because I trade in the morning up to just before lunchtime, and then I know that the rest of the day I have completely off. So there's absolutely no trading. I don't trade New York session as well, simply only trade London session, because then I know once the London session is actually done, the day is free. I don't have to worry about trading. I don't have to worry about positions I'm still in. Whereas if you're trading multiple sessions, you hold through London, New York, maybe into the next day, you're constantly having to check these trades, manage these trades. Whereas it's completely stress-free if you're only trading one session. The main reason why I actually do this as well is it allows you to have full focus. Those few hours where you have to have full focus on the charts with no distractions, and this is when you can find all your setups. Whereas if you're going all day looking for setups, maybe you're having lunch, you're in the shower, you're at the gym, and you miss a potential setup because of this. Whereas if you know exactly when you're trading, it makes it a lot more easier in the long run. And next, you need to pick if you're going to be a scalper, a day trader, a swing trader, position trader. And this is kind of determined by, I feel like, your risk tolerance. Scalpers obviously have higher risk exposure because they're entering multiple positions a day, usually. Whereas day traders, they can take a couple trades a month, which is what I do. And swing traders, they could take one trade a month, one trade every couple of months if there's no setups presenting. But yeah, just kind of pick the style which you feel like would suit yourself perfectly. And next, you're going to want to pick your confluences. And the main way to actually find confluences is either by watching YouTube videos, seeing people's breakdowns. I've done quite a lot of breakdowns on my channel in the past, or buy a course. A little plug, my course in the description. Very, very good to actually learn the confluences to actually trade and see them put into action. And main reason why you want to pick your confluences and not just build a strategy straight away is because I feel like you have to test these confluences. Which ones do you see more easily in the markets? When I started trading, I wanted to trade with Wyckoff. So if you know Wyckoff, you'll know what I'm on about. You need so many different confluences inside just Wyckoff to actually get a trade and to actually see it. And it's very easy for the trade not to be valid. So I didn't really want to complicate it, and I didn't really see this easily in the markets. So I'd be looking at the charts, I'd be like, is that a distribution or is that a accumulation or whatever? And I was like, it's quite difficult for me to actually find setups and actually recognize the confluences. So I completely scrapped it. I was like, this is too complicated. Let me simplify it a lot. And I just picked basic confluences and just tested these. There are many confluences which I've just completely disregarded and that have just gone from my trading. And this is because they're not performing as well. And this is why you have to backtest the confluences which you're actually choosing. So the next step is to backtest your confluences. And you're going to want to select the ones which have the highest win rate, the ones which you see most often. Because if you see it most often, then you can learn which ones are best to use. So let's say you're using support and resistance, for example. Which support zones hold? Is it a certain time? Is it with certain wicks or candlesticks? Once you start recognizing this from your backtesting, this is when you can start to implement maybe an entry trigger on this. And then how to actually use your stop loss and actually learn which risk to reward to use to actually get the best results for these confluences. What I suggest is people pick one session, one pair, one time frame, and one setup. I do feel like this makes it a lot easier. And in this stage of your learning, you can backtest all this. So you guys will find out which pairs actually suit you the most, which pairs move most in your session, have the most volatility, which time frames do you find you see these confluences work majority of the time on. This is what you're going to want to pick up on from your backtesting and your journaling in the first place. And what you're going to want to do once you actually figured this out is consistently try to improve your strike rate and your risk to reward. Obviously, if you increase your strike rate, your risk to reward technically can lower to make up for this, or you can lower your strike rate and increase your risk to reward, and it will give you the same results in the long run. Because it might seem like you're only catching a 1 to 7 with 30% win rate, but you're probably actually profitable overall, if you do the maths. But make sure the maths are actually correct before you actually test this on a live account. And moving on from that, the next step is to trade a live account. And I often recommend people to trade a live account from the very, very start. And the only reason why you wouldn't want to trade a live account is if you're getting used to the basics of trading. So let's say you first downloaded MT4 and you're not really sure how to move your stop loss, you're not really sure how to change the lot sizes, manage positions, everything like this. You're going to want to test this on a demo. Make sure you've got it fully on lock before you actually move on to a live account, because you're just going to end up losing money for no reason when you wouldn't even have made those mistakes in the first place if you actually knew what you were doing. So demo until you actually know the basics, and then move on to a live as soon as possible. Main reason why this is actually important, you want to get used to trading your own money. Money which you've put in hours and hours to actually earn is on the line. So it's going to force you to risk manage. It's going to force you not to risk 50% of the account on each trade, which if you actually do this, the account's going to be gone in a couple of trades, especially at the start of your journey, because you're not really confident in taking trades which you've actually seen in your backtesting live. Not yet. And you're going to want to use small risk on this account just to get used to managing your risk. So managing maybe 5 trades in drawdown, how do you manage this? Whereas if you're risking 15% of your account, 20%, 25%, you're not actually allowing yourself to go through periods of drawdown, because you'll just blow the account and then say, oh, my strategy doesn't work. Very, very dangerous. And the way to actually manage your risk properly is to take the exact same setups to which you're actually backtesting, because you know they work in backtesting. So if you take the exact same setups live, then it is a lot easier to manage your risk, because you know the amount of trades which you can actually lose in a row before you then start winning again after those losing streaks actually occur. Next up is to build a strict trading plan. This is very, very important. A lot of people have a trading plan, but it's kind of vague and it's not set in stone how to actually trade their strategy. You're going to want to have strict entry triggers. So a lot of people, their trade will be valid and they're just waiting, it's around the entry, but they don't like the look of it. They're like, oh, it's a bit bullish or it's a bit bearish, and they're just not pulling the trigger and actually getting in the trade. Whereas if you have something set in stone, if this happens, I'm in the trade. It's simple. What I do personally is if price comes near my entry and it's still valid, I'll set a limit. Even if I'm actively on the charts and looking at it, I'll set a limit because it completely eliminates the human error of actually not entering when it's in your price zone, in your entry zone. And it just allows you to enter without having to think, is it going to sell? I don't think so. Where it would have tagged you in and then sold. And you didn't make any money from it because you didn't want to lose the trade. I do think you should have a set in stone risk rewards or stop loss and take profit sizes. A lot of people disagree with this. People trade off of different areas in the market. So they'll put their stop loss above a high or below a low, and they'll target maybe an imbalance area or a previous resistance or support zone. And I personally was testing, and the 1 to 3 hits if I have a winning trade like 80% of the time. So I just stick with 1 to 3s now on GU, 10 pip stop loss, 30 pip take profit, and that's how we're trading nowadays. And you should have rules for closing positions early. So if you're in a trade and let's say you're in profit, or let's say you're in a loss even, what would you want to see, or what do you need to see for the trade now to be invalid? So it needs to be a reason that the trade has no longer had any chance to actually go to a take profit. So why would that trade no longer run in your favor? Even if you're in profit, if you start seeing price maybe break structure to the previous direction or the direction in which you're trading against, then this is a good sign that the trade is probably going to reverse against you. And maybe that is a sign to get out of the trade. And if you had this set in stone in your plan, you know, once you see this, close out, maybe maximize your profits or minimize the loss which you might actually take as a result of holding the trade in the long run. You might have actually made holding the trade out to either the stop loss or the take profit. And the last step, which is hopefully the step which you guys are all going to get to, and this is to scale your trading account. The best way to scale is to consistently deposit into your account. This is obviously called the compound effect. And if you're consistently depositing into a profitable trading strategy that you're trading on that account, then it's just going to continue growing and hopefully never stops growing. You know, we all want an account that we bring up from 1K or 10K to 500K, a million. That is obviously always the goal. People obviously will do account flips and flip it overnight, but I feel like it's more impressive to consistently make profit every single month or half of the year, be profitable overall and consistently grow in that account. I do feel like that is quite impressive. Even if you're depositing small amounts from your full-time job, your part-time job, or any other income which you actually have, this will continue growing your account, and with the profits increasing as the account size increases, you're going to grow that account very, very quickly. So if you have any other tips for beginner traders, be sure to leave them in the comments, and I'll catch you guys in the next video.